Okay, good morning, everyone. Welcome to Maze Live. Thank you for joining us on a Monday morning, bright and early. Hopefully everyone got a coffee. So let's see. We have 68 in here so far. Let's see. So we'll wait a few minutes just to make sure we get some more of the attendees in here, and then we'll get started. Good morning to those of you who just joined us. We'll get started in a couple minutes once we hit like 75% of our registry level. Good morning. Happy Monday. Favorite day of the week.
I think it's amazing you all get up so early in the morning to learn about internal controls, by the way. 8:30 on a Monday, so congratulations.
It's like a breath of fresh air on a Monday morning.
You think so? You think?
Just to have a nice start to the week to learn about internal controls.
Exactly. Because I'm sure a lot of you, took that Korea test in high school, and then, everybody's like, when I grow up, I cannot wait to spring to internal control for my entity and stuff. So
I can't wait to be a part of it.
Yeah.
Okay, so good morning, everyone. So Stephanie has posted slides for the first class this morning, but I'm going to go over some housekeeping items in a few minutes. I guess we're at, nearly 75% of who was registered, so I'll just give it until 8:35 to start. Someone says that Catherine needs to drink more coffee.
So just to let you know, I am actually in Disney World doing this class. So I woke up 6 o'clock, which is 3 o'clock your time this morning. And I totally had a lot of tea this morning. So I think I'm okay in the caffeine department. But thank you. No one wants me to be on more caffeine than I have already had.
Okay. We'll get started in a minute. Okay, and then, so I guess I'll just get started. Welcome everyone to Maze Live. Welcome to our first session this morning. I just wanna go over a few housekeeping items before we get started, just to cover our bases. So first, if you're encountering difficulties in Zoom, please use the chat function in Zoom to get technical help, and one of us will help you out. Also, if you have questions during the class for the speaker, please use the Q&A function. That way we can catch all of them. And we're going to hold questions until the end of the presentation. And also, please keep in mind that the session is recorded. So if you prefer, please ask your questions anonymously if you want to remain anonymous. which is an option in the Q&A function when you pull it up. And then next item is, for polling questions, we are going to ask polling questions throughout the presentation. And in order to get CPE credits, you will need to answer the polling questions. Whether or not you get the correct answers does not affect your CPE credits. It's just to maintain attendance. And then if for any reason you can't answer the polling question, please use the chat function to, sorry, I got distracted with the chat there. Please use the chat function to let us know. And then the last thing is when you exit the Zoom presentation at the end of this class, it will redirect you to a survey. So please fill out that survey so that we can send you a CPE certificate, which you should expect to receive in about a week. And that's it. So this morning's session is all about fighting fraud with internal controls. So our first speaker is Catherine Yuen, who is a partner at Mays & Associates overseeing auditing and advisory services here. And then presenting with Catherine is Brett Black, who has worked with the Kern County Treasurer's Office in the role of Principal Treasury Investment Officer. So with that, I'm going to give them a podium and let them start their presentation.
Thank you, Whitney. Good morning, everybody. I am Catherine. I'm one of the partners with Mays & Associates. Can you see the slides? Yes, okay, perfect. So thank you for having me today. And I've been with Mays for 26 years. For the last 25, I was an auditor, and this year decided to do accounting services instead. But so I've been on both sides, and I thought, what a great opportunity to talk about this fraud and internal control with what we have going on for the last few years with the changing environment. I'm very happy today to have Brett here with me to present. So what we're going to do today is we have 90 minutes. So for the first 45 minutes, I will talk about, like the basics of internal controls. And then Brett's going to take over to talk about the real life examples. Now, some of you may have already had this class a few years ago with us, with Mays Life. So I just want to say the focus on our class will be the changing environment that, the local governments have had in the last few years. The theories may be the same, but we are going to focus more on, how governments transition from pre-pandemic to, full-blown remote working environment to nowadays that has a kind of like a mixture, like a hybrid version. How do you address those changes and still maintain good internal controls? With that, let's see what we got going on. Okay, what we will cover today, just some, the basic, the framework, everybody has heard about it, like the 5 elements. And then we'll go through some real life examples. Some background information. Okay, so a lot of people, you hear, especially auditors, you say something and they will go, well, that's not good internal controls. Well, what actually is internal controls? Internal control is just basically is the system that consists of your people, your policy, your procedures. Basically, it's everything you kind of put it together to allow the organization to function. So when you think about, let's say if it is a pot of soup, it's all your ingredients, the temperature, your stove, your cleanliness, it's everything that get put it together to allow that soup to be cooked into a wonderful meal. So it's the same concept. So what is good internal control? So now there are 3 objectives for internal controls. Internal control is a system that allows an organization to operate, to provide information, and to stay in compliance. So when we say good internal control, that means the system should allow operation to safeguard the assets, operate effectively and efficiently, provide reliable information, and comply with the laws and regulations. Now, so who is responsible for the internal controls? Management and government the governing bodies are the two basic groups: management, design and implement the internal controls, and the governing body oversees what management is doing. Now, some of your organization may have two extra groups: the internal auditors that help management to meet these internal controls responsibilities, and an audit committee that assists the governing body to monitor the overseeing functions. Now, what you don't see here is external auditors. External auditors should not be part of internal controls. We are there to assess if the entity has adequate internal control, so we cannot be part of it because of the independence issue. So internal controls is kind of like a abstract concept. So a while back, some really smart people got together and go, gosh, we need to kind of make it easier for people to understand. So let's break it down. Let's provide some tools so that people can actually implement this thing, right? So what they came up with is like kind of like 5 components to look at internal control. So they say, well, if you do well in each of these different components, you probably have a pretty solid internal controls, okay? So the 5 components are: you have control environment, risk assessment, control activities, information and communication, and on top is the monitoring. So we're going to go into every single one of these and kind of talk about it. And essentially, its effective internal control will provide a favorable control environment. And then you have to have periodic risk assessment. You have to have effective control activities, effective information and communication, and ongoing monitoring. It will make more sense once we go over the presentation to kind of take a deeper look at each of these components. So the first one is control environment. Notice how it is at the bottom because it is the foundation of your internal control environment. Your internal control structure. What that is 3 different things. They are the infrastructure, the people you put in it, the actual system, your information system, your safeguarding, the physical safeguarding, or like the virtual safeguarding, that kind of infrastructure. And then it's the standards and procedures that your organization adopted. And then it's the process and the structure that you put into it. So it's a lot. So when we go back to that example of making a bowl of soup, these are the ingredients that you put into it. If the ingredients is not fresh, then your soup would not be good. Or if your chef is not qualified to make soup, then they probably can't make a good pot of soup. So it's all these things that you put into the system in order to have a favorable result. Okay. Now in prior so I'm very nerdy in case you haven't noticed. I know many of you have worked with me before. So in prior presentation, we kind of put a lot of theory to it, but this time I thought, well, maybe I'm just going to give you a bunch of questions so that you can kind of ask yourself about your organization to kind of evaluate where you are at. Okay, so if you're wondering if your organization has good control environment, these are some of the sample questions that you can ask. Do you think they demonstrate integrity and ethical values? Do you think they have a governing board that actually take an active role in overseeing the management performance? So that doesn't mean that they have regular meetings, but actually those meetings really make sense. They really have the ability to evaluate management performance. Are there documents, policies and procedures that clearly document who has authority and responsibilities to do what? How about attracting talent? Does your organization pay competitive pay? Do they provide continuing education? Do they make sure that staff is well trained? Now, the last one, I put an asterisk on it, and I'm going to explain why. Does your organization have measures, incentives, or rewards to drive accountability performances? it is good to have those, but if you take it to the extreme, that it may not be a good thing. So an example I have is maybe, I want to say 20 years ago, I had an auditee that the governing board would hold the finance department accountable based on the number of auditors proposed adjustments. So their goal is, the governing board thinks that as long as the number decreases from prior years is a good thing, but it got finance staff so nervous that they started combining different adjustments into one just to bring the numbers down. So we'll get this adjustment there like 5 pages long for different things, hitting capital assets and interest income, because they were so afraid that they're going to have a higher number of audit adjustments than last year. So that doesn't make sense, right? So the accountability portion, that has to make sense to what the goal is. So it cannot just be a pure number. So in my case, it cannot be a pure number of adjustment. It should be the content of the adjustment that be monitored. So the challenges nowadays, we have had a pretty unique situation. 2 years ago, or maybe 2.5 years ago, everybody was doing in-person work environment, and then all of a sudden we got all shut down, and then most of us are doing remote. And then now, we have half and half situation. So this ever-changing environment provided a very challenging condition for control environment, because procedures that once worked do not work anymore. Maybe all your policies and procedures address in-person work environment. Then it didn't work in 2020, then you revised it, and then it didn't work during hybrid. There's also reduced and lack of face time. A big part of control environment depends on maintaining the corporate culture. So for example, before 2020, maybe you have your council members walk around, or your city manager walk around, or your executive director, and then they kind of talk to staff, they kind of communicate this is our expectation, this is what is important to us. Now with lack of face time, it is hard to pick up what your staff's struggling with, or what are the challenges they're facing, right? So it makes it more difficult to maintain a unified control, a corporate culture. And also the last thing is the Great Resignation. It happens to a lot of our clients. It happens to, I guess, entities in general in the US, that a lot of people, because of the last couple of years, kind of changed the way they think about life, and they have reduced, workload, or they retire early. We lost a lot of institutional knowledge, also just talents in general. So these are things that we are facing more unique to us in the last 2 years versus, before 2020. And the possible responses that could deal with what we had talked about is, consider taking an active effort to maintain communication. Maybe periodic emails to staff, not just to give directions on what they should do, but maybe set some goals and benchmark. Maybe have some emails to kind of tell staff to communicate your culture. Team building experience is good, and also maybe if something is to celebrate, you have a big capital project, maybe you can talk about that. Just something to bring the culture back into your organization. One-on-one meeting is good. Ask for feedback. Things that you used to pick up in the kitchen, overhearing staff talking about stuff. Maybe those now you need to take a more active role in, communicating with staff or building that bond. And then the second suggestions also kind of bring us to the next internal control component, is the risk assessment. Frequent risk assessment is also important to look at your organization regularly to assess risk. So with that, we're going to launch our first polling question.
Yes. Okay, I just released it.
Okay, so there is, don't feel pressure to pick the right answer. We are required to launch these polling questions because it is a webcast, so we need to make sure you're still there. But just pick the answer that you think is correct, and then we will share the result.
Okay, looks like nearly everyone, we're at like 90%.
Perfect. Okay, which is not part of the fraud triangle?
Okay, so 88% answered wicked. And then 6% rationalization and 6% pressure.
Okay, so the answer is wicked because it's not part of the fraud triangle. Thank you, Whitney.
You're welcome.
Okay, so going to the second component is the risk assessment. So what actually, I don't even know what I pressed. Okay, there we go. What actually is risk? Risk is basically anything that negatively affects the achievement of those corporate objectives. Remember, the 3 corporate objectives are operationally, the organization should be able to safeguard its assets and also function effectively and efficiently. The organization should be able to report timely, produce meaningful reports timely, and also stay in compliance, right? So anything that affects those 3 objectives is called a risk. Now, the 4 steps to do risk assessments are identify the risk, estimate the effect of the risk, assess what can be done, and then decide when to do it. So I'm going to give you a real life example that has nothing to do with accounting, but I thought it would be, just to kind of show you an example of a good risk assessment situation. So some of you know about my husband, Tim Frisch, because he used to be an auditor. Tim has 3 brothers, Joe, John, Tim, and Tom. No girls, okay? So my in-laws, Margie and Frank, have 4 boys, and they would usually take the boys to a summer road trip. So you have to imagine this is the 60s, okay? So that's before GPS and internet. So what do you think the first thing Margie and Frank did when they get to the destination? They pull out a map, they pull out the yellow page, and then they find the nearest emergency room and map out how to get there, the fastest route to go to the emergency room. Why is that? So that was a risk assessment because Margie and Frank looked at their 4 boys and go, something's going to go wrong. One's going to push another, someone's going to fall into the pool, someone's going to break a leg. So they identified that there's a great risk that somebody's going to ruin their vacation. So then they go estimate, they think that, well, this is something beyond their control. They cannot really fix it. So now they have to go to, make sure there's an emergency room close by. And then they have a plan. They plan on the map. Did they ever go to the emergency room? Unfortunately, a lot of times, one of them do get hurt. But because of this great practice of risk assessment, they actually, all the boys are still alive in their, 50s and 60s. So their parents did a good job. So that is an example of a good risk assessment. You kind of anticipate what's going to happen based on observation and experience, and then you formulate a plan and decide when you should take action. So you can ask yourself, I have a bunch of questions here. I'm not going to go into every single one of them because I do want to leave a lot of time for Brett at the end to talk about his part. But these are the questions that you can ask your your organization where you at with this risk assessment. Today's challenge is that, again, ever-changing environment, it's so hard to do risk assessment. Maybe you've done it 6 months ago, and then your accountant left and you have to assign that person's functions, and now you have to do it again. You have to constantly be doing it. And then the other thing that I want to bring up, which may not be a focus, pre-pandemic, is with so many people working remotely or part-time remotely, do talk to your IT every time you approve a new working situation, because there's a lot to kind of take into account. How is the asset? How are their assets? Is it secure? Is that going to work out? Maybe it's your person who does bank transfer. Should they be doing it offsite? Can they be doing it at Starbucks? Stuff like that. We are accountants. We don't have the expertise in that. Do talk to your IT person. If you have a contractor, that's even more important because they may not know what your organization is going through right now. So you do have to, sit down with them and talk about it. Hey, is this okay if we set it up this way? With the Great Resignation, you may used to have somebody that, do a great job in risk assessment, and now you have a new person, and then you assign that person this function to do risk assessment. Does that person really have the ski? Now, ski is a term that auditors always use. What that stands for is skill, knowledge, and experience. They are three very different things. You can hire somebody super smart out from school. They may be very skilled, but they may not have the experience in this industry. So they may not know, they may not be able to observe trend, right? You may have somebody that maybe you hire somebody from a city that has no enterprise fund, and now this person is in your district that is in full accrual, and they may not have knowledge of what can go wrong in this, utility situation, right? So make sure. And just because somebody has like 20 years of experience working in the industry doesn't mean they have skill or knowledge either. So make sure that you have the person who does risk assessment has the ski. Now, what if you just cannot find such person? Maybe team people up. You may have an accountant that's been there for 30 years, but not very good at all these new GASB. Team that person up with, this new finance director that has all this GASB experience, but no experience. I'm sorry, all this GASB knowledge, but no experience. Team them up, have a team to do the risk assessment. So that will give you, enough coverage for all three of these areas.
Are you ready for the next polling, Catherine?
Sure.
Okay, poll number 2 is up. And remember, if you don't see any polling, please write your name in the chat so we can get your attendance. Okay, I'm about to end the poll and sharing results. Okay, in general, what percentage of fraud happens because of weak internal controls? So the first answer was most popular. We need to take internal controls seriously, duh. That was 88% of you. And then B, it does not keep me up at night. There were 3% that answered that. And then why are we even talking about this? 2%. And then I kind of know a little bit about segregation of duties, 8%.
Okay, so control activities. Well, what does it really mean, right? Okay, so just to recap, we talked about the 3 objectives. Then we say, okay, we're going to identify risk. And through identifying risk, you have produced, policies and procedures. So the control activities, what it means is that these are the action plans, right? And well, I'm sorry, action plans actually policy and procedures. Now these are the real action that you're actually doing it, right? Okay, when you think about control activities, most people automatically think about segregation of duties. And it is very important, so we want to put it in here. 3 things should always be segregated, which is authorization, recording or reconciliation, and custody of assets. So an example would be, in investment transaction, the persons who authorize the investment should not also record or reconcile the statements. And then the custody of the investment should also be held somewhere else. Another example will be, for expenditures authorization, disbursement of authorization, one person should approve the PO, somebody else should receive the goods, and then a third person should authorize the payment of that invoice. Now, other part of control activities that maybe we don't, give as much attention to is that, these are the things that we also need to consider. Are there proper procedures appropriately documented in a meaningful manner? With so much turnover nowadays, it is very important to document how things should be done, because when you have a new staff coming in, it's difficult to pick up things that somebody left off. What we've noticed nowadays is that there's not very much overlapping of staff training, like meaning if somebody retires and then you will hire a new person and then the existing person can train the new person. Nowadays, we notice a lot of times the person's already left, and then you have 2 or 3 months gap. Then you hire somebody in, and this person have to kind of figure it out on his or her or their own. So it is very important to properly document authorization. So we've been telling clients to, maybe the existing person can, document it through, videos and, do a Zoom meeting and then record what they do, share screen, and just kind of just do a show and tell of what they did to, let's say, bank reconciliation. That may help, to train the new person. Also, make sure that financial data should be regularly analyzed by somebody with SKI. Remember, skill, knowledge, and experience. Now, this is not the analytical review that auditors do annually, because auditors do it with, in a very high level of data analysis. You do need somebody regularly do a data analysis in a more micro level to make sure that, to identify any fluctuations or any issues. Now, also, are there controls over information processing? Is your system reliable? Are they, is access to the data being restricted? Can people make changes without authorization? I know that in 2019, a lot of our clients say, well, they were going to update the system because the system is outdated. Then the pandemic hits and a lot of people delayed those implementation. So there may still be weaknesses that you thought you were going to correct a couple of years ago, but it's still here. So, it's time to kind of look at where you are with, where you are in mitigating those areas of internal controls weakness. Now, are there physical controls over assets and records? You used to be in a all in-person environment. Maybe that was a set of physical controls that you had, but nowadays with hybrid or remote work environment, you may need to reevaluate those controls over assets to make sure they are still effective. Now, I do want to point out that the benefits needs to outweigh the cost of these control activities. For smaller governments, sometimes the appropriate second person to, for approval or review, it may be, a members of your governing body. Now, I also want to say that sometimes too many level of approvals may not be a good thing. Like if you have 5 people approving the same invoices, one of the the 5 approval, the people that give the approval may feel that, well, the other 4 person has already looked at it, so maybe I don't have to really look into it. So make sure that there's enough approval but not excessive, so that people people don't start relying on other people's review and approval because they feel like there's a safety net. Now, challenges nowadays, what we notice with our audit clients is that when 2020 hits, many of our clients may not be ready for paperless environments, so they kind of struggle a little bit, and they came up with some policies and procedures that had to work at the time. Bills had to be paid, documents have to be signed, so they kind of did that for a while. But now we're 2 years into it. Maybe go back and look at it to make sure that your control procedures are well established. The examples I have here was that, maybe for a while when the pandemic hit, your organization were relying on emails for approvals, just back and forth. But it may be time to kind of look at your system to see if there's a better way to do it. Because a lot of systems actually do have modules to allow for approvals and reviews. Also look at those digital signatures. In the beginning of the pandemic, a lot of people were utilizing Excel spreadsheets so they can initial and date when they approve stuff. But that is not a very reliable source of authorization. So you want to kind of look at maybe digital signatures, which is more secure than just typing the initial on a piece of Excel spreadsheet. Now, also the changing of process, because there are so many changes, because you may have lost a few staff, individuals are taking on multiple duties nowadays. So do make sure that they are actually still not being able to manipulate the data without approval. You still need to make sure that the segregation of duties are there, even when you have less people. I know it's easier said than done, but it is important to make sure that those, the 3 brackets, the authorizations, the approval, and the reconciliation, those are being, separated. Okay, and then this last part, make sure that you have, because of the change of physical environment, make sure that information is still safeguarded. Your check stock still, located in a safe place. Or if let's say you have payroll records, they are really locked up, especially in hybrid situation. Maybe staff used to put payroll register on your desk for approval. But if you're not coming in until Tuesday next week, but then there'll be staff there on Monday, where should you put it? Is there a safer place to put it so that there's no wandering eyes to be able to look at things that they shouldn't be looking at? And then this next point, we are going to talk about it a little bit more when we talk about information and communication. We have a lot of IT challenges nowadays because of the changing environment. Make sure if your staff's working remotely, they are logging in through secure networks. If they work for, in a public environment, make sure they are, logging in through like a VPN or similar situation. Communicate to staff clearly about the policy of using those machines, the laptops owned by your organization. This is what our expectations is. This is how you can use it. This is what you can put in our machine. So those are important things to, work with your IT person and then communicate to your staff. Now, this next challenge that we noticed is that highest priorities were given to immediate needs. There are so many competing needs right now or in the last 2 years. It is hard to do the day-to-day operation things. You may have different directions every few months from your governing bodies to look at this, look at that, and you have to manage your ARPA reporting, and then you still have a bunch of stuff to do. So what we've noticed in our clients is that things that get left behind are like reconciliation between systems, bank reconciliations, things that are very crucial to internal controls that got left behind because they are not as time demanded, they're not as time sensitive as paying the bills or paying your staff or applying for this new grant. But do kind of look at your list of things that you're behind and make sure that you reprioritize with your staff so that they are still doing these reconciliations in a timely manner. Okay, I think we're supposed to do our next polling question, right, Whitney?
Yes, so I will release poll number 3. And again, if you don't see the polling question, please put your name in the chat. So establishing a culture of preventing fraud falls under which category of the SCO's internal control guidelines?
Okay, Whitney, I'm gonna keep going because I want to give Brad,
Okay.
Enough time at the end.
Yeah.
Okay, so you guys can keep doing the poll. I'm just gonna, talk while you're doing that. Now, next component is the information and communication. Notice how it is on the side. What it means is that it's very crucial to have good communication and manage your information throughout all cycles of your internal controls. It helps in every single area, like your control environment, risk assessment, control activities, and monitoring. So essentially, the 3 goals of information and communications are, they have to be reliable, relevant, and timely. Oh, perfect. Okay. See, 65% of you got it correctly. All right, so I have a bunch of questions here that you can ask your organization and evaluate, how they're doing. Now, number 4, I'm highlighting it in red because it's different from your handout. The idea is the same, but I don't want to confuse you. I think on your handout it says, does management have the ability to override the financial system? So the answer should be no. You don't want your management to have the ability to override in your financial system without any records. Okay. Now, challenges nowadays with information and communication is we kind of talked about this previously. Public Wi-Fi may be used. You may have staff that works in a Starbucks, and then people may be able to get into the network. So an example was we had a staff a few years ago who was super dedicated. He went on a vacation. On his way back, he decided to do emails in an airport. So he used the free Wi-Fi and he logged into the system. That's all he did. So at 7:30 in the morning, I got an email from allegedly him asking me to open a document. And, I didn't have my tea yet. So I replied back. I'm like, hey, is that really you? I thought you were on vacation. He was like, oh, yeah, it's totally fine. Please open the document. Then I thought, well, because of the way he said things was not normally the way that he said things. So I told IT, and it turned out that somebody got his, this person's password and username was in that person's email account. So sometimes it can be like, it happens so fast that your staff may not even notice it, that somebody got their information. So do make sure that, make sure you communicate to your staff if they are using the public Wi-Fi, they have to log in a certain ways to protect your network. Also, maybe, if you can consider, issuing them personal hotspot. I know there's a big cost for this, so, talk to your IT people about it. And then just discuss with them, what is the best way to allow your staff to work remotely. Okay. And then, the other portion is you can have really good policies, but you still have to educate your staff of these policies and procedures. So do tell them, you need to keep work data on work computers. We had clients beforehand that they have dedicated staff that started to sending us information through their Yahoo email account. And then the account got compromised like twice in a matter of a month. And you don't want that to happen. So make sure you know, talk to your staff about if it is work data, use the work computer, use the work email. Block the sight lines. You know, if they're logging in public places, make sure that they make sure nobody is seeing what they're doing. And then there's, you know, another few things that you can consider. Now for monitoring is on the top, because what that means is that we want to make sure that you want to make sure that whatever you agree to do in the other 4 components, you know, your policy, good policy and procedures, your risk assessment, and your control activities, and your information and communication, all those things actually happen. You know, sometimes we can have a great plan, but if you don't monitor it, it may not happen. You know, you may have a lot of staff turnover, so the new person didn't know that they should monitor it. Or you may just have people that don't have time to do it. So now, make sure the monitoring has to be an ongoing basis. And when you find out things that should have been done and not done, there got to be a plan to correct the action. Okay, so now these are the questions that you can ask yourself. You know, are there control in place? You know, are control procedures in place? Have they been performed? Are they effective? Now, when there are control deficiencies, either you identify internally or identified by your external auditors, have they been communicated to the appropriate parties? If they have to do with, let's say, disbursement cycle, did you tell your AP person to look into this, or the person who review AP records, do they know about it? Were these control deficiencies mitigated by corrective actions? So the challenges nowadays is that, you know, policies may be outdated, or procedures, they don't correspond with the current environment. Again, it has to do with just how fast things have changed in the last couple of years. You know, so what our suggestions is, you know, frequent conversation with staff to make sure whatever you decide to do, hey, is that really helping out? You know, in my early example about that audit adjustment, maybe the first year did make sense. Maybe the organization had 100 adjustments. So the council said, well, next year I want you to only have 30. But a couple years down the road, kind of think about, does it make sense? Should that be our benchmark, or should we start looking at other things to help finance to close their books better? Okay, and then always ask for feedback. We don't like feedbacks. You know, we are a bunch of professionals and we have a lot of pride in our work, but feedbacks are important. Ask them, hey, what I suggest to do to mitigate these control weaknesses, did it help, or does it add a lot of workload? You know, talk to your staff about it, because without the feedback from the frontline workers, you never know what you think helps actually is helping. And then for audit findings, sometimes we notice because organizations just don't have time to resolve those. What we suggest is that maybe help your staff to reprioritize tasks. Let's say you have 10 audit findings. Maybe reprioritize them. Hey, which one is the most important? Let's resolve that first and then move to the second one. Now, the second suggestion is auditors, sometimes we give you this grand audit recommendations that may never be practical for your organization. You know, we may say, well, this is bad, don't do it, do something else. Then you're like, what? You know, you don't know me, you don't know my organization. So work with your auditors, sit down with them and go, hey, this is just impossible to do. What other ways what can we do to mitigate this control weakness that is in our own, you know, ability to do? Do sit down with them, because what I usually see is if you have all these audit recommendations that you cannot implement, a lot of people will just start turning the other way and not addressing them. And that's not a good way for your organization to have internal controls. Okay, so this is my last slide. This is in summary, now hopefully it makes more sense. You got to have a favorable control environment with good people, good policies, with a tone on the top that is communicated to your organization. Do your risk assessment periodically by people that have the skills, the experience, and the knowledge. Make sure your control activities are effective to your organization. Make sure your information and communications are reliable and timely, and also make sure there's ongoing monitoring. Okay, before I turn it over to Brett, Whitney, I believe that there's another polling question, correct?
Yeah, so I just launched poll number 4, but Brett, totally feel free to continue on.
Okay. So yeah, my name is Brett Black. I am the Principal Treasury Investment Officer for Kern County. Kind of a silly title, but what that means is I manage the Treasury investment pool and then all the banking, commercial banking and the merchant services for the county and the schools and some of the special districts. That's a little more hodgepodgey. But I can say I've been here 8 years and we are constantly getting hit with fraud attempts, people trying to rip us off. So I'm going to spend some time focusing on the actual tangible ways that people try to get in and get your money, both internal and external. And being that we're essentially a cashless society today, it'll mostly be on electronic payments and check payments. So first we'll go over some recent fraud cases in California that you may or may not have heard of. And something to notice is that for the most part, I mean, really about probably close to 100%, all of this is going to happen as money is either coming into the organization or on its way out. So you really need to focus your attention on safeguarding money coming in and going out. So we can go ahead and go to the next slide. Get these polls out of the way here. And I just came off a vacation, and being that I live an hour away and work in California, East Coast market hours, my 4 a.m. alarm today seemed a lot earlier than it normally does. So I'm a bit brain foggy. So apologies in advance if this is a little hodgepodgey or scatterbrained. So City of Compton, Salvador Galvin, he embezzled $3.7 million. He was responsible for taking money in. I couldn't see what capacity, I don't know if that was some sort of cashiering window or what, but there was basically no oversight. So he was able to take some cash off the top, not huge amounts, 200 to 8,000, that's a little larger, but he did this little bit every day, added up to 3.7 million, and he was sent away for 6 years. So, it could be cameras over your cashiers, some sort of your invoice system that it needs to match, and that's checked against the cashier drawers, but you need to make sure that nobody has the ability to literally just take cash. I think this was the most kind of brazen effort, but it worked as he got about $4 million. Next slide. Little larger. Rita Crundwell, Dixon, Illinois. So she took about $54 million. She was a sole signatory on the accounts. And so she would create bogus invoices, have bank accounts open at different banks, and that the invoices get them approved and then have the wires sent out. And she would be paid for services that were never rendered. Eventually, outside auditors found out, and she was sent to prison for 20 years. But again, there wasn't oversight. Her having that much control over submitting invoices, getting them approved, sending money out, could have been easily solved, and the city would be $54 million richer. Next slide. Michael Mean Nguyen, pretty similar situation. So he had access to outgoing payments and the record keeping. So he took a little over 5 million from the city of Placentia. So not only could he send the payments out fraudulently, he could amend the records to kind of cover his tracks. And eventually he was caught and sent away as well. Next slide. Fresno, so this is a little different. So online phishing scam, this is more recent. So 614 grand. Legit vendor, bogus invoices, different bank info. And funny thing is, so Catherine and I gave this presentation at CMTA back in, what was it, May? I think it was in May.
Yeah.
And I'm presenting to a group of people there on how to safeguard and not get hit with fraud. And on my way home, I get a call from our bank that, not the county, but the schools, but they keep their money in the county treasury. And we have the same banking agreement with them. They got hit for about $600,000 from the exact same thing. Thankfully, we got the money back, but this is a much easier one because an email can be sent from someone in Bangladesh and can be a little risk to them. And it is very common and surprising and scary how often this works. So this is a big threat. And hopefully everyone gets emails from their banks constantly, but I know we're constantly getting emails from Wells Fargo mentioning just to be on the lookout for this because these attempts are on the rise and very prevalent. So I haven't heard if they were able to get money back, but yeah, we actually had another one, which is funny, was also the schools, but they had, I don't really know how you safeguard against this one. This is a little tougher, but it was a legit vendor and legit person that they had talked. There was a construction project. I think it was a new school being built, and they had talked to Tom or whatever, the controller for this construction company, and they'd been paying them. His work was being completed, and Tom calls Nagy, whatever, the schools, and says, "Hey, just so you know, we're updating our bank info and everything's good." And it turns out that Tom had gotten fired like the day before, and he got angry and was trying to get the company back. So he sent his own personal info to the schools, and they sent him $240,000. And it was similar to Fresno. The construction company called the schools and said, "Hey, where's our money at?" And they said, "Oh, well, we paid Tom." I said, "Well, Tom doesn't work here anymore." Tom wasn't, I think he was more angry than he was smart because he never even moved the money. He just sat in his account at SunTrust for like 2 weeks and were able to get all the money back. But it can get tricky. It can seem very, very legitimate. And the common practice to safeguard that, I can't think of a better one, is just if you get a request for a change in bank info or initially, you Google the company and you call the number listed, and you work your way up to the finance department and you verify that way. It might take a while. It might be a bit of a pain in the neck. You might have to send a phone for 20 minutes until they route you to the right person. But don't just take any change from an email. Actually look the company up online, call the company, verify that way. But that's our standard practice here. And that's the school's practice, but you can have great practices in place, but if people don't always follow them, you're in a tough spot. So it's important that you have good practices and standards in place, but also that you're constantly reminding people of what they are. People have a tendency to get lazy and to be a little trustworthy, and that is a huge threat to fighting against fraud. So try to be good about that. Next slide, please. So normally would do this presentation, I would have a little icon of a beer, and I would say that, there we go, that I'd say that buy me a beer after the conference and I'll give you the details on it. Ours was a little tricky. So we had 19.6 million taken from school districts. Thankfully, it started before I started here, but it wasn't uncovered until later. And this was basically a failure of lack of reconciliation. It's a little more technical, so that's why I say to buy a beer and we'll go over the details. But it was basically a lack of reconciliation on the school's part and oversight of the auditors that they never asked for the proof of cash. A vulnerability on the bank side from a bank merger, which resulted in a product change and a vulnerability that we were never made aware of, and kind of just a perfect storm. Couple that with people retiring, not notifying our office that those people were no longer reconciling the accounts or responsible for them. The new people didn't have access to the statements because we didn't know that they even worked there. It was kind of a comedy of errors. We were able to get just shy of, I think there's about 300,000 that's outstanding, but we got about, of the 19.6, we got about 19.3 million back. And this was a very strange one, but essentially what was happening is people were going door to door. They got a hold of an account number, and of our 65 odd accounts that we had at Wells Fargo, there were a couple that had this vulnerability. And again, it was from a product change that we thought we were completely safeguarded from. And some bad guys got a hold of an account number, and they're going door to door, and they're saying, "Hey, Mr. Smith, whatever, my name is Bob. We have this debt relief program, and if you owe American Express $2,000, you give me $1,000 cash, and I'll pay your bill for you." So they would take the $1,000 cash. The bad guys would go punch in Mr. Smith's account number, and the bill get paid. Well, the money was being paid from a ZBA or zero balance account at the Treasury, which holds not an unlimited amount of money, a very large amount of money. And so these transactions were going, they went on for years, but they were pretty small, and they got bundled up with the rest of the AP payments, and they just went unnoticed on our end because we were just looking at the lump sum from looking at the liquidity and cash management portion. The other entities who were supposed to be in charge of reconciling and auditing their accounts. And it finally got noticed when a flag, it was one of the vendors that one account number at a company was trying to be paid for by one account from a bank. And so that set off some alarms internally. They reached out to us, we went back and discovered it. We were working with the FBI and Wells Fargo, who both had said it was the largest type of fraud like that they had ever seen. Eventually what happened is we were able to show that it was so bogus. School district in Kern County, California was paying bills for, someone's boat payment in Miami, that they just unpaid all the bills and returned all the funds. It took quite a while, but we learned quite a bit from that process. One thing that was scary is we learned that for commercial accounts, the rules are, so if you're on your individual account, if you get hit by some bogus charge, you have 60 days to go to the bank and dispute it. They have to return the money. The vendor can come back, or whoever can come back, and they can argue, and you may not get the money back if it's legitimate. But if it's a commercial account, you technically only have 24 hours. So you need to really make sure that your accounts are being reconciled on a daily basis, at least a cursory glance to make sure there's nothing on there that's, if you can do a full reconciliation, that's better. At least a cursory glance to make sure that there's nothing goofy going on. Because if you find out about it, if you do a monthly reconciliation, technically that's too late and they don't have to return the money. So we learned way more about fraud than we ever thought we would know. Afterwards, we had someone come in. His name was Dave Koresh, no relation to the guy in Waco, but he had and he's since retired, but he had a consulting firm that would do sort of fraud, vulnerability, penetration testing, if you will. And he went through our operation from start to bottom, from all the way from money coming into the cashiers to it being invested and then coming back. And he looked at every step along the process. And, after this happened, that day, we kind of had an all hands on deck meeting with Wells Fargo and looked at everything. And we thought we were completely secure before, and even more so after the fact. And then this guy came in and he pointed out a dozen different ways that we could have been ripped off either internally or externally. So, it was, we paid him, like 20 grand he was out here for like a week and a half and gave us a full write-up. And the ways that we were vulnerable were just shocking. We never would have even thought of these things. And he pointed out that if you're an honest person, you're probably not going to think of these things. So just because you think that you are secure and you haven't had anything, I would highly encourage doing something like that. I know the drawing a blank, is it Frank Abagnale, the guy from that Catch Me If You Can movie? I believe he has a company that does similar things. I think he works for Paychex now, but I think there's a group that will do a similar sort of audit. But I mean, this is actually money. It's actual money leaving. So it's I'd say worth its weight in gold, because especially with how big some of these invoices can be for construction projects or IT vendor or whoever, you know, if 20 grand, and I don't know what it costs now, this was a few years ago, but you know, it's pennies compared to possibly what could be taken. And then just aside from financial risk, the reputational risk you face as an organization, I mean, really, if you're going to be a fiduciary, I'd say it's very, very worth it. So I would say that should be at the top of your list, if it's not already, to inquire about something like that. So go to the next slide, please. So looking at types of fraud, I mean, it's going to be internal or external. So internal can be a sole perpetrator, like some of the examples we saw earlier, that somebody that has too much access and too little oversight, they can exploit some vulnerabilities. It might be years until that money's found, or until that person's caught. At that point, the money's probably spent. It's probably not coming back. We had insurance to cover the loss, and as great as insurance companies can be, they're also kind of in the habit of not wanting to pay out. So don't necessarily take solace in that fact. But again, just really make sure and really kind of examine if there's any kind of weak link, any person, and they could be the most honest, trustworthy person that's been there for a million years, but you know, they could get a relative that comes down with, you know, cancer or, you know, gambling debts or whatever, that's going to push them over the edge to want to, you know, take advantage and be dishonest. And your job is to make sure that doesn't happen. Could also be collusion, and that one's a little tougher to deal with, because you can put all the dual controls and safeguards in place, but if you have people that are working together to get around that, that's going to be tough. So I'd say the more you can separate and segregate the duties, the better. Make it harder. And then again, this can be money that's either incoming or outgoing. So incoming money, that would be like the Salvador Galvin example, where they had some flaw that he was not being, there's nothing checking against the money coming in against invoices that are being paid or money that's outgoing. So that would be like the Rita Crunwell. So she was able to create bogus invoices and send out bad wire payments. So again, you want to make sure that people that are submitting the invoices and approving are not also the people sending the money out. External threats, the phishing or business email compromise, that's extremely prevalent. That's going to be someone from a trusted vendor or a trusted employee. It could be, you know, the CAO's office or CEO of a company or school district or whatever. And it's always going to be an emergency. They're going to come through and say, we need to get this money out immediately. You know, it's always an emergency. And it's going to look legit. And these people are very smart and very good, but there's going to be some bogus bank info in there. Maybe it might say as a trusted vendor, it might be the name of a trusted vendor, but they have it as an acronym, you know, the payment details, and then they open up a bogus bank account with that acronym that, you know, stands for something completely different. But be aware of that. You want to have a process in place for any kind of emergency payments, because those will come through. More often than not, they're probably legitimate, but don't fall for that kind of urgency trap where you compromise, you know, your safeguards you put in place so that you can get this, you know, late payment out, and then you find out that the money's in Russia. Fraudulent ACH debits. So if it's an ACH debit, that's gonna be somebody coming into your account, pulling money out. Best practice is you don't allow people to debit your account for any kind of bills that are being paid. You always want to initiate the payments outgoing, so sending ACH credits. So we'll talk about it in a second, but ACH fraud filters, or what they're called, you want to have in your accounts. Effectively, it acts as a force field against your bank account, that anyone that's trying to come in and take money out, it just gets bounced off unless you give them authorization ahead of time, which also is a vulnerability. You need to have separation of duties there. but we'll talk about that again in a second. But just be aware that we get attempts at that constantly. We get notices from Wells Fargo. They don't go through. That fraud filter force field, or if you will, it bounces off, but we get notified. If you are a large institution that's sending money out for payroll, vendor payments, debt service, or whatever, your bank account number is out there. I know our main bank account is used on so many bond issuances that these distribution lists have 50, 60 people on them. And when they send out the email showing the wire instructions for the money coming in, that's going to 60 people, and there are probably, I don't know, dozens of these a year. So multiply that by 20 years. I mean, that number is out there to thousands and thousands of people potentially. So you need to make sure that's protected. And lastly, check fraud. Very easy way to safeguard against this, and also very easy, surprisingly, to create bogus checks. I didn't realize it, but apparently you can buy software online for extremely cheap and a printer on Amazon and the cardstock to do it. And you can just print checks from your house, and it takes almost no training. And if they get a hold of your check, they have all the info they need to reproduce a bogus one. So there's some bank products that you can have in place to safeguard against that. And we'll talk about that on the next slide. Next slide, please. Or I'm sorry, it's coming up. So for external threats, again, you want to take advantage of banking products to safeguard against them. So and you don't have to be an expert on it, but reach out to your bank. So things like ACH fraud filters for the ACH payments. You want to have dual control for all outgoing payments, wires, ACHs, creating templates, editing templates, and then also on the checks. So something called positive pay and something called pay validation. The banks might use different jargon, but essentially positive pay is where you're going to provide the bank with a file for all your outgoing checks, and it's going to match the dollar amount of the check with the check number. Pay validation is going to list the payee name. I think some banks might merge them. At Wells Fargo, it's two different products, but basically any check that goes out from the county, we're telling the bank, this is the check number, this is the dollar amount, and this is the name of who it's going to. So if somebody tries to create a bogus check, it's not going to match a file we've submitted, so it's not going to go out. If they get a hold of a genuine check and they either try to change the dollar amount or change the payee name of who it's going to, it's not going to match and it's going to get rejected. But you also need to make sure that you have dual control in place for the people that are submitting those files. So say you have Sally, and Sally is submitting the file. You want to make sure that Sally can't go in and add her name in there. And then you also want to make sure that the person approving any, because sometimes there might be an issue where it's not scanned well. And so it could be a legit check, but you have to go on and visually verify with the bank. You want to make sure that the person that is submitting the names and the person that's approving any discrepancies is not the same person. Because again, you could have someone create a bogus check, it's not on the file, but it pops up at the bank and they can go through and approve it and say, oh, that's a good payment. So it's not enough to just have these products in place. You want to make sure that you have the right kind of control, and your bank should be able to help you with that. They're hearing about these cases constantly, and they should know what's best practices. If you're a smaller organization, it's going to be a little difficult because you may not have, the number of people to separate everything appropriately, but just try to do the best you can and try to get creative if you can, to not be held back by a staffing limitation. Internally, you want to have policies and procedures that address this. So policies both on new bank accounts and services. So at the county, if anyone requests a new bank account, there are forms they have to complete, they have to put it in writing. We have all the recommended fraud prevention products on there, but they all come with a cost. And so everyone will usually balk at the cost and try to get around it. There needs to be a very, very good reason. And sometimes it might be a small petty cash fund or something where they're only keeping like $300 in there because it's whatever, the nurse's, Christmas party account or something. In that case, it may not make sense to load it up with $60 a month in charges, but you need to just take a look at it and be reasonable. If it's an account where there's a lot of money coming through and you're looking at taxpayer money, you need to be able to justify why you skipped paying whatever $50 a month on these products to put taxpayer money at risk, because if something goes wrong, they're gonna come looking at you. And nobody's going to care about the $50 that you saved a month if it's going to be thousands or tens or hundreds of thousands of dollars of lost money. And then, so dual control wherever possible. It can be a little bit of a pain in the neck, but again, you want to make sure that you have it in place, because if you're working in the public side, no one's really paid enough to take on the kind of risk. And that was something that he really hammered home. The consultant that we had, we had tried to, we prided on ourselves on how lean and efficient we were. And then he kind of pointed out, he's like, you're really not being paid enough to take on this much risk and have this much liability hanging over your head. And that made a lot of sense when he said that. So you want to make sure dual control. So outgoing payments, creating templates, modifying templates. It doesn't do any good to create a template. So a template is if it's money you're sending someone often via wire, ACH, you just have all that information saved in there, so you're not having to enter it each time. But you want to have dual control for creating and approving the template and then changing it, because it doesn't do any good if you have the template, but then I can just go in there and change it to my bank info and I steal the money. And then also for user access for online banking. So this is one of the vulnerabilities he pointed out that we hadn't thought of, is we had dual control for everyone here for all outgoing payments, but I was able to go in hypothetically and create a new user that didn't need dual control for any outgoing payments. Yeah, just want to be aware of that. And that's kind of your friend. And it's a nice CYA, check the box, but also it can really help to crack down on any bad actors. And then lastly, going back to the business email compromise, you want to independently verify all payment instructions and invoices. And if there's any changes, you want to Google the company, call them up. It might take a little bit of time, but you'll be glad that you did. Next slide. So again, you want to make sure that all your accounts have the appropriate fraud prevention products and services. So we have a regular meeting with Wells Fargo. It was in person, and then COVID hit, and so now it's kind of just reports that we get. And we're at this point, we don't really need to meet beyond the report, but I would request this from your bank. So a listing of all of your accounts, the fraud prevention services that you have on there. And then if there's not any, look at the potential risk. Again, if it's a small account. So one thing, with the county, we have a lot of accounts that checks never come out of. So to pay for payee validation or positive pay would be, there's a waste of money because we never have any checks going out. So instead we have a $0 threshold, meaning any check over $0 just automatically kicks back. I think most banks will do something like this, but you want to take a good look at all the accounts you have, any potential threats that you have, and any recommendations from the bank. You want to look at their ACH fraud filters, make sure you have dual control. So you can add what you'd call ACH company IDs to this. So the county does have an agreement with PG&E, and it's a vendor, and it was set up a few years ago. I forget why exactly. I think there's some cost savings there. But basically, this vendor comes and it sort of prepays our PG&E. It was a silly thing. The auditor's office set it up. But this is the one company that can come through on the county side, and they can actually debit the account. So there's that force field there, but each company is going to have a specific ACH company ID. So what you're able to do is go into the account and list that as an exception, saying, okay, well, we will block everybody except for the people that we approve, and you can put dollar limits in there as well. On your merchant service, so if you have credit cards being processed, the fees that come out if you do a gross settlement, meaning you take all the money up front, then you pay the credit card fees at the end of the month, the merchant services or the credit card companies or merchant service company you're using will come through and debit the fees. So we have them added as approval. So I should I guess I should clarify that there's the PG&E, but also American Express can come in and they can debit certain accounts. But we had to go in and manually enter this ACH company ID to do that. That's another thing you want to independently verify, because somebody could, like the check thing, they could email you and say, hey, just heads up, we're changing our ACH company ID. And they would be able to go in and take money out. Dual control for everything. So for template creation, online access, not just your main account, but your custody account, any JPAs. If you, a lot of municipalities will use things like LAIF or CAMP or CalTrust, any money market mutual funds, any payment systems you have. Stay aware of business compromise email attempts, independently verify wire instructions, and also routinely make sure that the appropriate staff has access to the appropriate reporting that they need. Again, one of the issues we had here at the county with the fraud we had with the schools a few years ago is, at one point they were going on and routinely reconciling, but as people retire, quit, leave, people had replaced them. And since we're in different locations, we weren't made aware of this staffing change, and we shouldn't have, but we just assumed that they would let us know. And the new staff, we didn't know that they're there, so we never created profiles for them, and they didn't have statement access. So you want to make sure routinely. Something we also do is we send a letter out a few times a year to each department in schools and outside agencies, listing the accounts that they have, the bank services they have, bank products, fraud prevention, all that, and then who the signers on the accounts are, and then who has user access, and then verify who is reconciling the accounts. So we send that to them, and we make them return that in writing. So just want to stay aware, especially in the public side, people are constantly retiring and leaving, and you don't want to be taken by surprise by that or caught off guard. Next slide, please. So I thought this was an interesting one. This was a story that consultant had in the fire department for the city of New York. They had their payment file, and this is kind of over my head, a little too techie, but they had their payment file prepared by the city, sat on a server for like 10 seconds, and then was sent to the bank to process their payroll, to direct deposits and checks and all that. In that 10 seconds it sat on the server, Russian hackers got in, I don't know, but they were able to go in and change all of the bank account information for direct deposit to this one account. So as soon as that file hit the bank, instead of sending out the $20 million payroll to the firefighters in New York, the money was long gone to Russia. So talk with your IT people, make sure everything in that process is smooth for payroll, AP, any type of electronic bulk transfers that you're doing. Make sure that everything is tight and secure there. Again, you want to have a policy in place for last minute emergency payments. They will happen. It does happen legitimately, but that's pretty much how always those bogus invoices come through. It's always an emergency, and it's usually from somebody high up, and people get intimidated and they say, okay, well, I need to do this, or else I'm gonna get fired or whatever. But you need to have a process in place, and just know that, we don't care how much of an emergency it is, we're going to follow this process to verify that this is you, this is legit vendor, but don't be caught off guard there. And reconcile daily if you can. Again, at least take a cursory glance at it, because you have 24 hours. And if you miss it, it's too late and that money's gone. We were very lucky that we got the money back, but technically we should not have. And if possible, make sure that you have a separate auditing firm for your organization and any outside agencies that you're doing business with, or if you're holding funds for them. In Kern County, there's a pretty predominant CPA firm. And it just, in hindsight, it was not the best move that everybody had them at the same time, but different businesses and engaging contracts at different time. And it just so happened that we have the same CPA firm auditing us as well as the schools. And this oversight happened on the, in each person thinking the other was reconciling. So you want to, if possible, have separate firms auditing that. And just again, I said it again because it's like the main threat that everybody faces and the most common. Independently confirm changes to payment instructions. This, you can have dual control all the bank products and services in place, but if you legitimately attempt to send a payment out and you're just sending it to the wrong place, there's no bank product on the planet that's going to stop that, and that is the most common and most prevalent. So just stay aware there. And I believe that's the last slide on our last bit of my part, at least. So good.
Yes, I think that's the last slide. Thank you so much, Brett.
Okay.
Okay, Whitney, would you, since we only have 5 minutes, would you like to launch the last polling question while we answer this one Q&A question?
Yeah, so I just launched poll number 5.
Okay.
So I'll hide it. And then if you want me to talk about the questions that have been asked.
Oh, okay, I can talk about it. So the
Okay.
question was, how do you factor in materiality when addressing a control breakdown if it is small? So I guess it depends on what it is. For auditors, we always look at, okay, why, like you have, when you look at a internal control breakdown, you also want to understand why. The cause behind it can be a bigger issue sometimes. You know, let's say it may be let's say if it is like something completely small and only happens one time, it's an exception, then that's one category, right? Versus something that has happened, but the reason behind it is because maybe your employee doesn't know what the common practice is, then you have to address the underlying issue in terms of, you know, maybe that's like a lack of, you know, education to new staff, or, you know, in Brett's example, let's say that is this particular internal control breakdown is because of the lack of reconciliation between the two systems. So although these differences can be small right now, the reconciliation of the two systems should be done, and something could have happened that can have a material effect. So I guess when there is a what you call like a control breakdown, if it is small, it depends on what the underlying issue is. So it's better to address that than just look at the dollar amount of this particular incident. Did that answer your question, John? Okay, so now we have some additional resources, because since you all got up at 8:30 to learn about internal control, you must be pretty crazy about this topic. So in case you want to learn more, the SCO has an internal control guidelines. They have tons of suggestions, and there's the link for it here. And then with that, we want to thank you all today for attending our class. We have the next class at, I think, 10:30, right, Whitney?
Correct. And there's other questions, Catherine, in the chat. I don't know if you want me to cover
Oh,
them.
no. Oh, yes. We have 2 minutes. Sure.
Okay, so one of the other questions was, have you any experience in dealing with ransomware issues or other shakedowns?
I personally don't, Brett. Do you?
No, I mean, heard about it from other organizations. And that's what I heard is, I mean, you're kind of, they kind of got you. I think it's just, I don't really know what you can do about that. So that's, yeah, I'd say just more probably on the IT side to make sure that it's hard to steal any. I mean, thankfully on the government side, I mean, it's all for the most part public information, so it's not really any kind of proprietary info they're going to get, but it's going to be, you know, if they somehow took control of assets. But that, again, I think making sure everything is airtight with all of your financial institutions. Yeah, I haven't heard of any. I think I heard of one in a municipality, but I think that's more. Yeah. Good luck, I guess.
Can I jump in on that one, Catherine? I just wanted to, because we have clients that have experienced it. Can you hear me? Okay.
Yeah, I can. So I'm maybe I'm not understanding the question correctly, but Amy, go ahead.
It was just because Brett kind of touched on it a little bit. It's whether anybody's had ransomware issues. I mean, they're out there. A lot of Brett's examples were kind of along those same lines where it comes to do with cybersecurity and making sure that you have your cybersecurity controls and you've involved everybody in the system and educating your employees on looking for things like that. But also one client that we had that had fallen victim to it didn't pay the ransomware, but because their backups were they had very robust backup system, they were able to not pay and did not lose anything, you know, but closed down the system, got everything cleaned out. We've had a few other clients where the bad guys have gotten in, and making sure you engage your IT department quickly. And again, educating employees on looking for scams, looking for ways that they can get in and not, you know, not clicking, as you said, Catherine, opening up that file, not clicking that link, not being suspicious of everything.
Thank you, Amy. Oh, Amy's one of our partners, in case you don't know her, but everybody knows Amy. So. Okay. Whitney?
Okay, and then there is another question about the Fresno scam. If you have a short document that talks about the Fresno scam or anything.
So I heard
Sure.
about that from someone in Fresno, and I was just able to read news clips. What I saw, it was still a pending investigation, and so I know from our experience, law enforcement tells you, like, try to tell as little as possible if that's going on. So I wasn't able to really find anything more than what was on there, just the kind of the headlines that, you know, somebody sent in a bogus thing and they paid it, and but that's the last I had seen. But I know they try to keep kind of tight-lipped with that if there's
Okay.
an ongoing investigation.
Yeah, it makes sense. They don't want to detail it
Mhm.
and share that level of detail. Okay, so one last question was, can you comment on how to be on guard for senior management collusion, such as what happened in the city of Bell?
I think it's difficult for, you know, I think it's difficult for some people to speak up, but I think one of the things that important is you do have to have those hotlines set up, you know, like the fraud hotline set up, so that people feel comfortable that they can, you know, call in. And I believe that there are services out there that you can contract with a third party that they can filter the calls for you, so people feel like there is a way that they can report it, and then if their jobs won't get jeopardized because of that. So it is more of a culture thing that you need to, you know, educate your staff that, okay, there is a, you know, fraud hotline to set up, that we set up. It is, you know, this is how it's done, and it is anonymous, and then so just to encourage them to, you know, to bring up the issue. I don't know if Amy or Brad, you guys have any other thoughts on that?
No, you're right.
Mhm.
Okay, and that was the last question in there.
Okay, well, thank you all for participating, especially Brad. Thank you so much for your time, and Amy for your contribution, and Whitney and Stephanie. So our next class is going to be at 10:30. There is a separate link that you can click on. We're going to talk about pension and OPEB obligations, new updates and stuff like that. So I hope to see you there. Thank you very much.
Thank
Thank you.
you. Thanks for your
Thank you.
presentation.
Thank you.